So, in early 2026, the Indian rupee is sending out some seriously mixed signals. I mean, on one hand, you've got market data that paints a pretty bleak picture, like a currency in total freefall. But on the other hand, you've got government officials calling it a golden opportunity. So, what's the real story? Is this a crisis, or is it actually the perfect time to buy? Let's dig in and find out.
Okay, so you can't really get what's going on here without looking at the bigger global picture. India, as you know, is a huge economic powerhouse, but right now its currency is caught in what looks like a perfect storm of global pressures. And believe me, everyone from Wall Street to New Delhi is watching very, very closely to see how this plays out.
And I'm not just being dramatic here. So far this year, if you stack it up against all the other major Asian currencies, the rupee is dead last. We're talking about the worst performing currency in the entire region, and that's a headline that, well, it naturally signals some deep trouble. But then, right as the alarm bells are going off, you get a completely opposite take from India's chief economic advisor. He isn't just trying to calm everyone down, he's completely reframing the situation, basically saying the market has it all wrong. And that right there, that's the central puzzle we're here to unpack. This really is the big question for anyone keeping an eye on India's economy. Do you trust the market signals, the ones that are practically screaming run for the hills? Or do you listen to the official government line, which says this is actually a rare buying opportunity? Let's take a look at the evidence for both sides. All right, let's kick things off with the case against the rupee. Section 1 is all about its rough year. For a minute, let's just forget opinions and official statements, because the numbers themselves, well, they tell a pretty compelling story. So by late April 2026, this was the exchange rate. It took over 94 rupees just to buy a single US dollar. Now, with currencies, a higher number here means it's weaker, it costs you more of your currency to get the same dollar. And this rate is pushing the rupee alarmingly close to its lowest value ever recorded.
And you got to understand, this isn't just a bad day or a bad week. Nope. It's really a continuation of a downward slide that started the year before. And even when the central bank jumped in to try and stop the bleeding, any relief was just temporary. The pressure just keeps on mounting.
So the big question is why? Why is this happening? What are the major forces pushing the rupee down so hard? That brings us right to Section 2, the headwinds and all that heavy pressure.
A lot of this pressure, it turns out, is coming from outside India's borders. First off, you've got rising geopolitical tensions over in West Asia that's spooking markets and has pushed oil prices way up, over $100 a barrel. Now, for a country like India that imports most of its energy, that is a huge economic hit. At the exact same time, seeing all this instability, nervous foreign investors are selling off their Indian stocks and pulling money out of the country at a record pace. Both of these things flood the market with rupees, which drives the value of the rupee way down.
And just look at the sheer scale of this capital flight. At one point, foreign investors had yanked over $18.7 billion out of the market. To put that into perspective, that's more than they pulled out in the entire previous year. It's a massive vote of no confidence from global investors. Okay, but that's the market side of the story. Now let's flip the coin and look at this from a totally different angle. Section 3, the contrarian view. How are Indian officials seeing these exact same facts? Here's the core of their argument, straight from the chief economic advisor. He's saying, look, if you're a long-term investor, not just some day trader trying to make a quick buck, then this weakness isn't a threat, it's an invitation. In his view, the Indian market is essentially on sale right now. And this optimism, it goes way beyond just the currency. You've got top officials, including the head of India's central bank, all projecting confidence. They're arguing that the fundamental building blocks of the Indian economy are more than strong enough to weather this global storm. They're backing this confidence up with a really robust official growth forecast, a solid 6.9%. But, and this is a big but, here's the catch, not everyone shares that optimism. Some private economists are looking at the exact same data, especially that conflict in West Asia, and they're actually lowering their own forecasts. It's a perfect example of two completely different interpretations of the same reality. So what you end up with is this. You've got the negative market data on one side, and this really positive official outlook on the other. And this brings us to our final section, the investor's dilemma. How on earth do you make sense of two stories that are so at odds with each other? So let's just lay it all out, side by side. In the pressure column, you have the harsh market reality, Asia's worst performer, record amounts of money fleeing the country, and high global risk. But then in the potential column, you have the official story. The currency is fundamentally undervalued, this is an attractive entry point, and it's all backed by a strong outlook for growth. And this really gets to the heart of the matter. It's not about which set of data is right. The numbers are the numbers. The real question is how you choose to interpret them. Are you a short-term trader who's worried about today's risk? Or are you a long-term investor who's focused on future growth? Your answer to that question determines which one of these stories you believe. And so, we're left with this final, crucial question. Is the Indian rupee a falling asset with more pain to come, just like the market seems to believe? Or is it a coiled spring, gathering tension, just waiting for the right moment to snap back, exactly as officials predict? The answer to that question is probably going to be one of the biggest economic stories of 2026.